Good morning, good evening, everybody. It's Jeff Scott, and this will be a very quick weekend update from the land of Hgsi. For those who haven't been here before, just a quick disclaimer. This is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I am a doctor, not a broker or an investment professional. I'm not affiliated with any software vendors or trading companies. The tools I demonstrate are those that I use in my daily trading. I paid for all of them, and therefore I feel I can say I have little bias. You may or may not see me use a number of different tools. What I use in my daily trading is a real-time platform, either TOS or TradeStation. I use an aftermarket analysis program, which is Hydro Growth Stock Investor. I use a number of Edge Rater products, including Edge Rater Club and ETF Bandit. I do a lot of seasonal analysis, although I probably won't have time tonight. And then I do a lot with Ian Woodward and Ron Brown's Woodward and Brown Investing. On that note, let's jump into a market review. As I said, this will be an abbreviated session, and for those of you that complain that I spend too much time going over the same thing every time, you will appreciate this. For those that don't, I apologize, but it is late at night, and it's time for me to pack up for an early trip tomorrow. So one of the first things I wanted to look at was about last week, and I think you probably all felt what I felt. It was kind of a, there were some swings in the market, but I was not happy with my performance. This is for demonstration purposes only. I look at the stocks that were in my holdings on Monday morning. I don't really look at any money management of stops, any of the hedges I have, so this may not represent my portfolio, but the stocks that I follow were down about 1% on the week. The S&P 500 was flat. Interestingly, it was a bad week for high growth stock investing, whether you look at the HGS 100 down 1.44 and the IBD 50 down 1.81. In red, which you can't really see real well here, actually let me, one of the things that's interesting is that of the bearish searches that I did looking for stocks to short, they actually very much outperformed. Those are in red for the week. And a lot of the folks that I listened to talked about how some of the winners underperformed and some of the things that have been trashed for the year overperformed. You know, I scratched my head and wonder why. I think what we might be seeing is selling the best, selling the winners, holding on to the losers. And since there's less selling in the losers, tax loss selling because of the potential changes in the tax rate, what you see is tax loss, tax gain selling this year and tax loss holding until next year when your losses are worth more money. So that gives you an idea that the market was flat to down last week. Let's see if we can get an idea of what we might expect this week. The other thing I like to look at is where do we fall on the scale of the stocks in the S&P 1500 above or beyond the midline on the Bollinger Bands, and is there a preponderance of them above or below? So you see 80% above the midline, which is considered bullish. The majority of them at the close to the upper part of the Bollinger Band, but less than 6% it looks like are extended above the Bollinger Band. Clearly this is a bullish looking pattern and feels more bullish than perhaps S&P 500 in my portfolio felt. If I go back to what it looked like last week at this time, you could see really about the same. During the week, you could see really not a lot of changes in that 80%. So a steady week, not a lot of overall movement in the portfolio. I personally got burned because I have a big position in FCX, which had a unhappy acquisition and pulled the stock down considerably, and I guess that makes up for some of my others like CTRX that have had acquisitions in the past and the stock has taken off like a rocket ship. So hard to predict acquisitions, and I was playing FCX because of an expected improvement in the copper world next year. I like to look at the state of the market. If those have been on here before, I'll go into the top-down view. And let me just adjust this for the size of this resolution. And let's go into top-down view, and let's go look at WB groups. Let's go major markets plus. And where was the strength and weakness in the market last week? Now, despite the fact that the market was kind of flat, Now that was Monday open to Monday to Friday close. Actually, S&P 500, as you probably were aware, for the last 5 days was actually up a tad. But I remember that's measuring from the open on Monday to the close on Friday. If you look at the 5-day changes, the winner was the Dow up 1%, the loser was oil, gasoline, and commodities, which means the dollar probably was strong. As you could see, it's up here. We talk about the dollar frequently. Friday looks a lot dollar, gold, stock, silver up top, volatility down, and dollar moved back down, was still up 0.2%. So ranking the strength, NYSE, which is a big index. Let's take a look at several of these to see if there's anything, kahunas, eurekas, etc., pocket pivots. And, all right, it opens up kind of good, and let's take out this stuff. What do we see here for those that are new? These are some momentum ribbons and accumulation distribution. Blue and red are pocket pivots up and down. I use an 8-day exponential. 50-day is the blue simple, 17 is the green simple, 200 is the red simple. And down here are some of the indicators I look for, which have been described well in prior programs. One could see all green, breaking out above the 50 on the NYSE. Looks actually healthier than I thought it would look. You can see it pull back to the 200s, making a nice move here. Nowhere close to the top on the high jump bar. So that actually looks surprisingly strong. We'll look at the Dow. The rest, which actually on Friday got above, closed right above the 50-day moving average. That's impressive. Weekly bongo is still red. I'd like to see that turn green before I get very bullish, but if it can hold the 50-day moving average, that will be, as I said, very impressive. Next on the list is take a look at the S&P 500, and you can see it too. That will either serve as nice resistance, and it will pull back down towards the 200, or if we can get lucky tomorrow, the S&P 500 may close up above the 50, which will be quite bullish because, as you notice, there's no moving averages here to be immediate resistance. The more likely or potential scenario is that we're going to bounce back and forth between this 50 and the 200-day moving average. But we'll see. I mean, I'm certainly would like to see it break out. On the small stocks, which have been leading, I believe, as I've watched the last couple of days, at least in my portfolio, and the NYSE does have small stocks in it, you can see these have gotten above the 50. Certainly a squeeze coming here with the 8-day exponential and the 50 coming together, the 17 looping above the 200. This is all very bullish looking. Again, we're in a bullish time of season. If we could hold this 50, maybe we will get a Santa Claus rally. That 50 is going to be an important area. I like to look at the S&P 1500 because the S&P 1500 represents the 600, which are small, the 400, which are mid, the 500, which are large, and it gives me a nice broad view look of the market. And again, very bullish to me, got above and closed above the 50. Now, very bullish is really the wrong term. Interestingly and potentially bullish, as you can see, there's no moving averages above it. I'd like to see this have a nice couple-day run, and I'd like to see this 50 turn into support and start to get these things turning up with the 17 getting above the 50 in the next week or so. So potential optimism here, but still a market that's going to be very news-driven. As I think I said before, I don't think the Republicans have a chance of not getting something done before year's end because Obama has laid out for them that he's willing to extend the middle class, and if the Republicans don't vote on something, then they'll be accused of causing problems by increasing taxes on everybody. And unfortunately for those who might be in the 2% and those who do a lot of trading, we'll probably see our taxes go up. But that's my guess, and if there is any type of a deal, you can expect there'll be an initial pop in the market. Looking at the dollar, which we've talked about several times as being anti-market. When the dollar goes up, the market has a tendency to go down, commodities go down, commodity-based stocks. We had called this perfectly here, so it hit the 200 and pulled back down to the 50, actually traded below the 50, got back above the 50 on Friday with a pocket pivot. Even though that's a red candle, that is because it closed lower than it opened, but it still was a very bullish day, tested at the 50. The dollar rises, it won't be as bullish for the market. And if you look at gold, In silver, they actually did okay on Friday, but you can see they pulled back in the setting of that dollar strength. This is gold, and silver, which may behave a little bit differently, has not pulled back as deep, but it's still pulled back from its recent highs. Next thing I want to look at is sometimes I like to jump into my trade station and take a look at what Elder had to say about, let me throw my buys in here, by the way, about the NASDAQ on Friday, and going into the weekend. And let's see here, faster. We talked about blue, you can buy or sell. Green is a buy, red is a sell, or red is a don't buy, and green is a don't sell. And the NASDAQ has come way up from when it extended below the lower band in the Elder envelope. It has pulled back to the middle in blue. It's blue in the weekly and the monthly. Currently is in a it's okay to buy scenario. It'd be interesting to see if it holds up this week, although as we all are aware, what the market does, the market will do, and it'll be driven by news and nothing else. Now, those who know I like top-down investing know that the next thing I do after looking at the market is to drop down and take a look at what industries are working. Notice there's 145. The top-down T1 looks at a balanced, all technicals, price and volume, and force index, which is price and volume related. Concentrating on near term, but looking as far out as 2 to 3 weeks. If I want to know what's working, what's not working, I want to know what's working right now. So I'm going to look at a 2-day force index up. 69 indices are in this area, which means, and the force index down are probably about 40, and there's 30 of them, which means that several of them did not make an impact on force and don't get into the category, which means they were flat. So let's take a top-line view here and see what's up here. Pharma certainly is up at the top. Even Barron's was very bullish about big pharma this weekend, so you might see a Barron's pop there. Oil and gas exploration, integrated oil and gas index, coal and consumable fuel. So a number of energy stocks up at the top. Curious, I'm looking for biotech. See biotech, it might be in there. Interesting week for biotech, and I'll make some comments about that because the American Society of Hematology meeting for us bloodsuckers, our hematologist is meeting this week, and so you might see some pops in those stocks tomorrow related to some news, some of the ones that we've talked about before included. As I've mentioned before, other diversifieds always are at the top because of the volume. You look at the 50-day moving average volume, Bank of America, 152 million shares. So if you're up a penny, you multiply it by $152 million, your force index is going to be pretty high. And you could see, we'll take a look at JP Morgan. I actually saw this over the weekend and said, wow, that's kind of interesting looking chart. Maybe it's time to get into diversified financials. It pulled back. You see a squeeze occurring here with the 1750 and the 8 all coming in the same place in an uptrend above the 200-day moving average, and perhaps getting ready to break out. 2 kahunas in the last couple of days, pocket pivot, everything turned green. And I'm going to put this into my buy watch for the week because I'm kind of intrigued by JP Morgan. And if there's a deal, this might be a sector to watch. Look at Bank of America was the leader, also breaking out and getting close to $11. And a little bit more extended than JP Morgan. But very strong appearing stocks in a popular group. Second group on the list was pharma. This is a group that Abbott I have some calls on, and you can see, and I bought my calls back here, shooting for a move up to the 50. Abbott is not a big growth story, but you can see on Friday it had a big pocket pivot with a big day coming off of the sort of a squeeze occurring, the 200, the 17, and the 8-day exponential. Nice move, big kahuna. Looks like some value came into the stock on Friday as well. Not much in the way of earnings growth, but what this does have is a nice dividend, 3.1%. A lot of these stocks have put out special dividends. I haven't kept track on Abbott or in this sector. That might be part of what popped it. Talked about J&J last week. Here's a chance to buy these old standbys at we call this free parking. Again, a squeeze occurring here with multiple moving averages. Big bullish day on Friday, pocket pivots in the stock, everything turned green on the momentum indicators, and a 3.5% dividend. Next one on the list is the index, and so we're going to stop here. Let's see if there's anything here that looked interesting. I usually like to buy the stocks that are above the index. Yeah, there's a few here I want to point out. So I'm going to look at, start at the bottom. Xenoport, don't know anything about this stock, but I love this pattern. It's pulled back, rounded bottom here, and it's got some overhead supply here on the at about 9. It had a couple of pocket pivots early in the week last week. Wonder if this thing might break out and get back up to its old-time highs, which is about a 60-70% rise from here. I would be concerned about some resistance here. It's not that attractive. It's not a high-growth stock, but it's a pattern that if I saw a kahuna come in here with some volume tomorrow, especially intraday, I might be watching to see if it breaks out and gets above this 50. Not a low-risk entry. Santaris has been a leader, lower left, upper right, and it looks like it's going to run. It makes money. It's had, it's sort of turned around from a loser to a winner. Growth in revenue looks actually pretty good. You can see my high jump bar when it peaks. The stock has a tendency to pull back. Peaks, it pulls back or trades sideways. It peaks, it pulls back, and it's nowhere close to the top. Everything is green, and that was one of the highest ranked high growth stocks on our search this weekend. Other one to point out is Nectar, only for the picture, and this is what I'm going to look for in the first one I pointed out earlier. I don't know anything about Xenoport except the pattern, sort of a scoop down here and maybe a J hook. It may run from here. It's going to have a lot of resistance here at 8 and then at 8.5, but the stock closed below 7. That's a 20% move in there, and that might be something to watch. Something's going on here. Big volume, pocket pivot coming in on a big day on Friday. Next sector we're going to take a look at is computer hardware. Don't know why this is making the list. I'm not a big fan of Hewlett-Packard, but I remember the chart actually looks kind of interesting. In a downtrend, so I'm not interested in it. Hitting up at the 50. If it breaks above the 50, it could run up to the 200, which would be a 30% move from here. I think it sees resistance here. It's tested it 3 days in a row and has failed. Not too interested. Stratasys, nice little pullback. Looks like it's ready to run again. Trades at a multiple of 60 with a slowing growth rate. I prefer to buy stocks whose growth rate exceeds the price to earnings ratio. Kramer says pay up to twice. Either way, these numbers are a lot smaller than the growth rate, which is not the pattern that I see in a stock that's taking off. That said, I'm only looking at 2 quarters here. I'm not looking at annual growth. And this has been one that's had some interest on Wall Street, as you can see, with a couple of nice run-ups. 3D Systems has made a lot of lists. I think it's maybe on the Vector Best list this week. Good earnings per share growth. Everything has turned green, had pulled back. Sort of a long-legged doji occurring here on Friday. So this is one that if it opens up, it might be interesting. Trades a multiple of 45. I'm a little bit nervous on the valuation, but certainly has been a leader over some time. Oil, gas exploration, don't know if this is a change in the world or the fact that here's 2 stocks up at the top that you could see that have had major moves because they were bought by Freeport-McMoRan. I started this discussion by saying how I got clobbered because my FCX took a big hit. They paid a lot of money. I'm a little bit, it'll be interesting to see because the second name in FCX after Freeport is McMoRan. This is a company that was spun out, I think, 20 years ago, and they're bringing it back in. And Plains Exploration was the other purchase. There was a well for MMR that had a problem and caused MMR to take a recent hit. So it'll be interesting to see. Here's an interesting pattern, I thought, on Kodak Oil. It's one of these small oil plays. And again, a pretty deep pullback, perhaps too deep for most. Big volume on Friday with a pocket pivot on Wednesday as well. Earnings per share growth coming into the stock. It's a cheap stock, trades at a multiple of 24 and has earnings per share growth far exceeding it. But the multiple on a lot of these oil plays does not get up much above 10 or 12. although in an early growth phase, that might be something to play, especially if the price of oil pops. To be wary, though, and careful. If one looks at a weekly chart, this trades in a very narrow trading range, although from 9 to 11 is still a 20% or so pop if it goes back to reach earlier in the year highs. See if there's anything else here that I thought was interesting. Now, I've talked a lot about Seagate and Western Digital, and we'll look at SanDisk and those two, and these are stocks that have had some interesting attacks. Here's SanDisk, which has, this is a stock you'd think would do well with all the devices on the market using RAM, memory sticks, SDXC sticks for cameras, sort of in a sideways zone. This is on a weekly. Things are turning green. Had a big week with a weekly kahuna. Makes money, but not a big growth rate. In fact, a slowing down growth rate, maybe turning around as we go forward. Don't know. Might be worth doing a little bit of research. Pocket pivots Thursday and Friday with a kahuna on Thursday as well. Breaking above the 50. Everything is turning green. Might be something going on in this group. If you look at Seagate and Western Digital, deep pullbacks despite great earnings per share growth, clearly slowing down going in the next couple of quarters. The impact of Thailand floods of a couple of years ago must be gone because the shelves are filled up with drives. But you could see with the pocket pivots 3 days in a row, volume coming into the stock. Something says that something has changed on Western Digital, everything turning green. And same thing with Seagate, also breaking above the moving averages, earnings rates, growth rates slowing down, but these stocks traded a teeny-weeny multiple, 3.6. Seagate actually pays a 4.5% dividend. I do have a position in Seagate, hoping to see that these things pop. Let's go to the dark side, see what's trading down. Then I want to go look at biotech, as I mentioned. Kind of been in the dumps for a while are the semiconductors. Let's take a look at them. So this is Avigo, which, I love moving averages, and you can see how it's failed at the 200 several times now and dropping down. Starting to get a squeeze as these moving averages are starting to come together. Certainly not something I want to buy, and with that 50-day right underneath, I probably wouldn't short. First Solar started having a run, hit a tough day. It looks like a bearish engulfing pattern on Friday. Great earnings per share growth coming into the stock. I've talked about it several times. It looks like it's changed its stripes, and maybe it's time to consider stepping back in. I'd like to see where it's going to go after this bearish day on Friday. The group is down, but you can see there's life coming into First Solar with a pocket pivot on the weekly, and on the daily side, a pocket pivot back on Monday. So this stock looks like it's waking up. Probably going to stick it on my watch list as well and see where it goes. Spread from communications, gosh, I guess if I wanted to short, this is not a pretty stock. This is a bingo, and it occurs when a stock is trash. So this might be getting close to a bouncing point, but I've got a kahuna down on huge volume, big bearish candlestick at opening below this spinning top doji. I guess it's not a top here. Earnings per share slowing down, ugly looking stock. Probably the best of the bunch, although actually I don't want serious logic, do I? Here's another one, similar pattern. Looks like it's breaking down. What's interesting on Cirrus Logic, it is great earnings per share growth, trades at a multiple of 17. And I've been watching this. I would not get into this stock until it probably broke above the 50. But I might keep an eye on this with its earnings growth. If this sector turns around, this might actually be a leader back up. Biotech, interesting, down here in the negatives. So, okay, it got pulled down probably by Amarin. So let me comment on 4 or 5 of these that I know well that will probably be in the news this week. So Regeneron is one of my favorite market leaders. As you can see, for those who've been on my calls, we talk about this one all the time. Number of new market introductions, huge earnings per share growth, revenue coming into the stock, trades at a multiple that's extremely high at 85, but I'll pay 85 times when I'm growing at 200 or 300. Ultimately, this is going to slow down, but if it makes these earnings numbers, the PE will come down with it. In fact, you just 2.25, about $4 among friends, $4.75. So if it makes its numbers, it's not growing at 80, it's growing at 40 times. So as the earnings catch up, the multiple will fall. This has been a leader. I don't think anything has changed in that fact. Celgene is presenting some stuff tomorrow at American Society of Hematology. I think it's called the MM20 study. Revlimid, which is their critical drug, will hopefully, if it's positive data, even IBD and their leaderboard talked about it being near a new buy point. Something to watch. Certainly the big leader, I think, big in earnings growth in biotech. Ignore this next quarter. That's wrong. It's not zero. Some of the other things that you might hear about. Let's see if they're here. Insight's been a stock that has not really behaved well. Looks like an inside day, a negative pocket pivot on Friday. Some stuff came out over the weekend showing a survival advantage on their lead drug. I mean, this will be a lot of resistance at the 200, so it's probably limited to where it can run. But I thought it was extremely bullish data. One that we talk about on this call all the time is called Ariad. Ariad's drug likely, there's a lot of talk about them gearing up commercialization. One of the analyst reports, in fact, they presented data this weekend that suggests that their new drug, which will be number 5 or 6 in treating a type of leukemia, which is not usually a good thing, is probably best in class and may actually be a leader in the sector, which would be a big deal. So Ariad is one to take a look at. The other one to take a look at, Hgsi, has pulled back a little bit and had great data come out this week. And the type of data that I think will get some people very interested. It treats a disease called CLL, their new data, which is the most common leukemia in adults. So the stocks don't look real good right now, but what I want to do is I want to find these guys before they take off. So Medivation, we talk about this a lot. If you bought it 2 weeks ago when it pulled back, you'd be very happy. You can see it had a beautiful run up here. But if you take Medivation and you go back to last year at the hematology meeting, or this was the urology meetings, and you see what happens when data gets presented at a meeting. Now, if this was if you were looking to buy this stock, and you were in the stock back here, very unexciting, it's below the 200-day moving average, and this happened, would you buy this stock? Would you think that was too high to jump in? That was a doubling overnight. How would you like to have been in the stock then? Well, this is when it probably hit a lot of people's radar. Kahuna, gigantic volume, and where we may have thought for traditional stocks this is ridiculous, what we saw was the beginning of a major bull run after data was released, leading to an approval of a stock, and a stock that actually these numbers were double because it recently split 2 for 1. So what I'm hoping for is on some of these, the PCYC, the Ariad, that I might get to see another run like many of us experienced with Medivation. And for those who've been on these calls, again, I've been talking about these companies for a while, as I think they will be leaders going forward. Back here, anything else I feel like talking about? Yeah, getting tired anyways, and I suspect you guys are getting tired of my voice as well. Now, others know there's other things that I do. I do what's called a group inclusion report. I did this earlier tonight. I'm not going to run it again for the sake of saving time. But I bet I could find it here. Let's see, recent. And we're looking for the GIF. Here it is. And this identifies which stocks actually made it to most of my groups, of the watch groups I have. And one of my beliefs are those stocks that end up in the highest number of these watch groups are the top stocks in the market. So we started with the top down, looking at what industries were doing well. The market thoughts, obviously it's going to be volatile based upon the news. Wouldn't hurt to do a quick check of the futures, and we can see the futures are telling me nothing. They haven't really showed anything, right? Sort of fits with the we don't know what's going to happen. So one of the tools of Hgsi allows me to run a report. So I look at, over the weekend, many, many different groups. And these are groups that I may copy from Investors Business Daily. I might get off of MarketSmith. I might run my own. I might see them somewhere. I might get them from an analyst. And these are where I like to fish from, Pocket Pivots and other groups that I think represent the best stocks. Now, if these groups all represent the best stocks in the market, then if you were in more than one of these groups, that might suggest to me that you are a more attractive stock and one I should be looking at. So I do a report that tells me which stocks are in the most groups. That's called the Group Inclusion Report. And I'm going to close with tonight, and this will be one of my shorter ones. So I'll tell you, if you like the, these were the buys, I'll leave them up for a second, that I found on my review this week. If you like this shorter approach, please let me know, and I'm going to continue it. These were the top 8 stocks from a more bottoms-down approach, looking at what made the GIF, and then after this I'm going to look at a couple of the buys that I picked that I haven't mentioned, and I'll say goodnight. Here's that 3D Systems. So I could have found it just by doing the GIF, and you could see it pulled back here. It's got this doji. I need to see where it opens up on the week. It makes money. Like I said, its PE is a little bit about the same as its growth rate, no dividend. Lower left, upper right, but it's got a little bit weak in here. Here's your cup handle. Is that a failed breakout? Is it a second cup? Is it going to run again? We shall see. CVR Energy is a refiner that also does some ethanol. Everything is green. Amazing earnings per share growth. Multiple PE of 6. Now, you always wonder, why would a stock be growing at 100 times, give or take, and have a multiple of 6? Because it's a refiner. That's about the multiple they have. But, you know, if you add up 240 and 295, it's about 535. 535 plus $1.11 is 646. 790. Multiply that 642, 40. You probably got a $50-ish stock here. If it, without any multiple expansion, you've got your 56 and 75. Be replaced by $1.43 to $1.11. Even without a multiple expansion, the stock price will go up. Certainly has been a leader. Dillard's got hit hard early in the week in the retailer segment, had been a leader. Fleet Corp, again, another leader, multiple 21, growth rate above. Not a big stock if you look at revenues, certainly a beautiful pattern, pulled back a little bit, maybe getting ready to run again. Hertz Global, interesting, Avis has already rolled over, and that makes me nervous. Red candle high makes me nervous. Everything is green, in a little bit of an uptrend, multiple pocket pivots, great earnings per share growth, multiple 12.7, growth rates here going up, certainly one that you might want to watch. It's not extended by high jump bar, but a red candle high sometimes signifies a time that it's going to turn around, go the other way. Here's my Regeneron. Storm Ruger, it and Smith & Wesson got clobbered on Friday despite great earnings, so even though it's been a great stock for a while, it seems to be not one that you want to spend a lot of time with right now. And one of the nice leaders, but an expensive stock, has been Visa, a very tight lower left, upper right pattern. So these 8 stocks came out just by doing a simple analysis called the Group Inclusion Filter, or report where you identify certain stocks that you might want to look at, and or certain groups, and then identify which stocks are in the most highest number of the groups. Last thing I want to do is just take a look at my buy list and see, are there any things here that are probably worth talking about that I haven't already mentioned. I've mentioned most of them already. Just open up my buy watch here. What I do is I look through a lot of charts, about 350, 400 today alone, put together stocks that I'm going to watch at the open, and then I do scans throughout the day looking for others that might be meet my criteria. We looked at Santoris. Terex is a heavy machinery company, and what interested me there is it just turned green there after sort of a kind of a flat saucer appearing around that 50-day moving average. Makes money, and multiple 12.9 is it's getting ready to break out here. This is the kind of thing I would watch, see if it trades above its opening range tomorrow. We've already talked about Regeneron. We already talked about Western Digital. NASDAQ is a small stock, trades at a multiple of 20. As you can see, a growth rate way beyond 20, which is what I like to see. Construction, engineering company, water, sewer, pipeline, and communications. Why else did I like this? Pull back to the 50. Took off on Friday with a pocket pivot on a very bullish day with gigantic volume, makes earnings. Watson Pharmaceuticals, a leader in the pharmaceutical industry, both generics and patented, lower left, upper right. Looks to me like it might be getting ready to run again. Everything has just turned green. These are the ones that I found on my review that I thought were interesting. Conn's is a electronics and home furnishing and appliance company, with Best Buy having some challenges, Circuit City being out of the market, CompUSA out of the market. Perhaps there's an opportunity for somebody that's got a well-run one to survive. Pocket pivot on Friday, lots of green here, makes money, trades at a multiple of 20, and grows at a higher growth rate. Flagstar Bancorp, this has been one we've talked about. In fact, we've talked about it here, 1, 2, 3, 4, 5. Last Friday, Friday before, certainly getting a little bit extended. It'd be nice to buy it when it comes back to the 17-day, which it seems to do on many occasions. This is a bank that has just absurd growth rates. Now, as I found out, it was because of a reverse split, and in fact, if one looks at I think this is correct. Do I remember correct? Yeah. I don't go back far enough on this. You know why this line is going up? And that's because, let me see what a monthly looks like. Yep, doesn't go back far enough. But you see the price here. That tells you if I go back here, it's got a price that was much higher, and they did a major reverse split. It's growing again. Most reverse splits don't work. But what a beautiful pattern. If I can get this thing down here, I'd be very happy. Doji here, it may open up and run again on Friday. Loved its earnings per share growth rate. Anything else that really stands out here? In the semiconductors, I looked at Cirrus Logic, I think, which had pulled back, had great earnings per share. Here's ARM Holdings. This is probably the leader. I think it's in the iPad and the iPhones. Pulling back on the 17-day. A break above that 8-day exponential moving average might be interesting. It's got a high PE, but it makes money. It's got growth. It'd be interesting to see. It's certainly one of the best performers here in this semiconductor area. It's a bit extended. On that note, it took longer than I wanted to take, but I am done. You all have a great week trading. Have a safe week. Have a great holiday if I don't do this again. And God bless everybody, and have a happy Hanukkah, Merry Christmas, and a Happy New Year. Good night, all.